The case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. So Bitcoin is desirable because it's portable, it's global, it's scarce, and I can't think of anything better.
It's no news that the global economy has been suffering a nasty decline over the past year. Whether it is in Argentina, where the finance minister has recently resigned, adding to the fears of investors who were already concerned about the spiraling inflation and dire public finance, or in Turkey, where the Turkish lira has lost a quarter of its value in 2022 and over 90% within the past year, or Sri Lanka, which has essentially ground to a halt because of a lack of fuel and cash, record high inflation, and skyrocketing prices. Even G7 countries are not left out of the mess. The Japanese yen has depreciated at an unprecedented rate, currently at record lows compared to the US dollar. A similar story can be told about the euro. The US dollar is almost equal to the euro for the first time in 2 decades, which doesn't mean the dollar is out of the woods itself. We also have similar wreckage in the financial markets, with certain commodities, equities, and bonds performing well below expectations. With the current state of global finance coupled with all the geopolitical tension, there are hardly any great choices for investors looking to multiply their wealth. This is where digital assets come in. One might argue that Bitcoin has not had a great year, but there is no denying that the leading crypto asset has many great qualities that make it very desirable despite the current market conditions. In a recent interview, MicroStrategy CEO Michael Saylor speaks about these great attributes and how investing in Bitcoin compares with putting money in real estate properties, bonds, company stocks, or keeping cash. This is a must-watch video for anyone who wishes to know more about Bitcoin, the world's largest cryptocurrency by market cap. Please watch, like, and share this video as much as you can to spread the message. Let's dive right in.
I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. So there's a risk with currencies. There's the obvious risk with bonds. There's a risk with stocks. And that takes you to property and collectibles. So maybe you collect Rolexes. A lot of people are doing that. A lot of people, you can see what people are doing in this macroeconomic environment. They're buying watches. They're buying luxury cars. They're buying real estate. If you look over the past 2 years, the money supply expanded by 40%. Single family homes in the US increased in price by 40%. So it looks in the near term over 2 years like single family homes are a pretty good inflation hedge. Bitcoin's performed better than single family homes in that time frame. But now we're stuck with this issue of, well, are single family homes an inflation hedge over a decade? And the challenge there is that as the price of homes go up, then there's an incentive for home builders to build more homes. So commodities, they have an appeal, but if you can produce more of a commodity, then if I increase the price by a factor of 10, I increase the incentive to build that thing by a factor of 10. So silver, gold, lumber, oil, homes, real estate in general, they're all subject to supply demand elasticity. And when the demand increases, the supply is going to increase. The general strategy when you're staring at inflation is, I want to acquire scarce desirable property. that I can hold for a long period of time. If I'm going to hold it for a long period of time, that means I got to be able to afford to maintain it. If you buy a really nice beach house in Palm Beach, you find that you have a 2% of your property tax. So in a decade, you have to come up with 20% of the purchase price to maintain it. Then you probably got to come up with another 1 or 2% per year to pay for wear and tear, hurricane insurance, electricity, repainting, whatever there might be. So if you take 4% a year of the purchase price, that means that you have to come up with 40% of the purchase price over a decade to maintain it. Bitcoin's not going to cost you 40% of its purchase price to hold it for a decade. So the maintenance cost on digital property is lower than the maintenance cost on physical property.
With Bitcoin and other scarce digital assets, you don't have to worry about absurdly exorbitant maintenance fees or an out-of-control supply when prices start rising. It is scarce, portable, and global, and these are just some of the qualities that make it unique. In his interviews, Saylor also compares investing in commodities and investing in digital assets. Listen as the highly intelligent American investor and entrepreneur proves yet again that no other asset comes close to the brilliance of Bitcoin.
The reason that we don't trust stocks as money over 100 years is because the board of directors and the CEO can change the supply of the stock. So Apple might be a good company, but if the CEO of Apple changes, the new CEO might double the supply of the stock. And so it doesn't necessarily make a good currency or a good money over the long term. So I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas, all of those have surged in the past 12 months. You'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? I mean, the average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. So why wouldn't you just go and get $1 billion worth of free oil, right? 1 billion barrels of it, because you would have made a fortune if you could have, but the average person can't stockpile oil. You couldn't take delivery of it. So at the end of the day, the issue is most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing. So I have to find property which is not correlated to currency. I need it to be scarce. I need it to be desirable. I need to be able to afford to hold it for a decade, maybe hold it for 20, 30, 40 years. And I want something that's globally desirable, ideal. And the ideal property is something that a person more affluent than me, more intelligent than me will want from me in a decade. So the case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now. And it ought to be part of people's portfolios. And I can't think of anything better, right? I mean, there are other things you can own, other assets. You can own Apple stock, you can own Google, you can own a building in Los Angeles, and you can own the New England Patriots. Well, you can't, right? I can't, right? But the things that you could own, they're challenging to own, they're expensive to maintain, they're not necessarily portable and universally desirable around the world. And in many cases, you may not be able to take personal custody of it. We got a phrase, not your keys, not your coin, in the Bitcoin world. But, if you own a building in Moscow, maybe you don't own the building, if the mayor of Moscow turns against you. And if you have a yacht in the south of France and you're Russian, maybe you don't own the yacht. And, if you have granaries in the Ukraine and a war breaks out, maybe you don't own a farm. And so most things, they live in a political domain or in a physical domain where your ownership rights are questionable. And you have to at least discount them with some risk, depending upon your citizenship and your own location, and then the type of entity you are. I think Bitcoin, it appeals because it is the purest form of property or ownership that the human race has yet to divine. And that's why I think it's valuable in a portfolio.
Anyone who is doubtful about Bitcoin just hasn't taken enough time to study it. That is why we've seen some of the biggest critics of the crypto space do a complete turnaround. We are probably going to be seeing more of this drastic change of heart before the year ends. For now, the king crypto asset is still on the path to recovery. As of press time, Bitcoin is trading at $21,796, a 4% gain in 24 hours and a 13% gain within the past week. The overall crypto market cap is also above $950 billion for the first time since mid-June. If the upward momentum continues, we could see Bitcoin recapture some more key support levels, possibly even hitting $25,000 in the short term. What do you think about Michael Saylor's interview and the recent price gains in the crypto market? Please drop your comments and observations below, and don't forget to hit the like button and subscribe. Everything helps with the YouTube algorithm so we can bring you more videos. Thanks for watching.